Hello and welcome to Commodity Champions. I'm Anisha Gupta. Well, we have seen a lot of movement come in case of commodity markets. The uncertainty in the equity markets amongst the looming recession concerns has every investor in search for a safe haven. The commodity markets have proven to be one such haven, with crude oil and gold giving much higher returns than the traditional equities in the Indian market. So is it time for you to switch your focus to the commodities market? To take this discussion forward, I am now joined by NS Ramaswamy, who's Head of Commodities at Ventura Securities. Anuj Gupta is VP Research at IIFL Securities. I also have with me Ajay Kedia, who's Director at Kedia Advisors, and Pritam Patnaik is Head of Commodities at Axis Securities. Gentlemen, hi, thank you so much for joining us on CNBC-TV18. Very happy festivities to you. And if you look at the last one, Samvat, or last 1 year, we have seen commodities give better return than equities. Of course, it has been a very volatile year. We've seen all-time highs and multi-year highs. And from then, there is a lot of correction. Is this the right time to start putting commodities into your portfolios? Is this the right time to start accumulating it? Is the question that I'm going to put across to all of you. And I'll start with gold and silver prices first, because when you look at the last 1 year, in the dollar terms, we may have seen a decline. But in rupee terms, euro, Japanese yen, Turkish lira, you look at all of the currencies, we have seen very strong returns come in for gold and silver both. Pritam, I'll start with you. If you were to include gold in your portfolio, what kind of returns can investors then expect?
See, Manisha, I am fairly confident that the coming year is going to be the year for the gold and silver. Primarily, there are two factors that has been governing prices. One was the interest rate hikes that's been happening continuously across all large central banks, and the other is the dollar index. Unfortunately, these are not mutually exclusive; they're actually inclusive. And the way I look at it, some of the noise has been now factored in. After the 2nd November event for the Fed, I sense that the lag effect of raising high rates is going to come and show the economic performance of all large economies. And that's going to hold back the hand of all the central banks. And then you could see softening in the interest rates hikes. And that would be the trigger for gold and silver. My sense in gold is that I won't be surprised to see levels of 55,000 to 56,000 by the end of the next year. And in the case of silver, I'm a little more bullish at about 67,000 levels.
All right. So 56,000 rupees as well in case of gold. That would be not too far away from all-time highs that the gold prices have seen. Ajay, how would you look at the gold prices? How much of a portfolio should be in case of gold, and what kind of gains are you expecting?
Very good afternoon, Mishaji, and happy Diwali to everyone. Definitely, gold and silver was slightly underestimated in 2022. I would just recall 2008 also, because at that same time we have seen global financial crisis. At that time also we have seen gold and silver both were under rated, and almost for 8 to 9 months they were underperforming. But since October 2008 to April 2011, we have seen a fabulous rally in gold and silver, where gold made a high of almost 1920, which we know today also. Similar kind of momentum we are expecting since October having started already. We have seen prices has rallied from 1620 to almost 1720, and hit back on the expectation that in November also there will be another rate hike. As Pritam rightly told, that already things have been absorbed in the market. And the conditions like geopolitical tension, recession fear, inflation concerns, equity market is slightly, we can say, overheated. So all these factors makes gold more attractive. Even in China and Turkey, we have already seen premiums have started moving on a higher side. So we see gold in near term, or let's say if we keep our view for next one year period. Here on domestic side, definitely physical demand and rupee weakness will add some more additional gains what we have already seen from last Diwali to till now. So we are expecting around 56,000 on the domestic side, whereas in international prices can go easily can cross 1850 to 1900 level once again.
All right, so much more gains expected from here on. Pritam, if you had to choose between gold and silver, which one would that be? Because gold, yes, and if you look at the Dhanteras numbers as well, I mean, these are still early days, because I do understand that various federations and associations are still trying to get those numbers in. But the initial ones, the code that I have from IBJA says that From last year, if you compare it, it's 30% higher in sense of physical buying in case of gold. Metal Focus tells us that the silver imports into India this year are at record highs. 8,000 tons is what we are anticipating. So clearly, even as the speculative or investment buying may not have been so strong, the physical buying clearly has been pretty on the higher side. So if you had to choose between gold and silver, what side you bend slightly more at?
Bent more towards silver, primarily being because I think it's a year of bullion, and that's also come back year for metals. And considering that silver would follow either of the two commodities, I sense, and I would put my bet on silver.
Okay, and you have a very bad throat. Clearly, you've been partying a lot during this Diwali. Mr. Ramaswamy, since we are talking silver here and it is all about metals and the industrial demand is expected to pick up as we go forward, how much would you bet your money on silver? What are your expectations? What are the fundamentals you're looking at and what prices are you watching?
I would be looking out for whatever Pritam said about silver. I would be more focusing on the base metal, the doctor, the copper. Would be one which will really shine throughout the 22 year and at least for the short term. So although silver, I vouch for whatever Pritam has said, I would add on to that is the industrial metal on the copper, because the way the LME and the Shanghai inventories are dropping, and the way the ICSG is talking about the deficit of close to 325,000 tons in copper, and that sort of a number which is giving an inventory for a global consumption close to around 4.9 days, and by year end it is likely to be even 2.7 days. So looking at copper, I feel copper could be a sure short bet. With the current LME price hovering at around $7,400, $7,500 in LME, we could expect it to again go back or rally up to around close to $8,500.
All right. And Mr. Ramaswamy, would you say that among the base metal prices, among the industrial metals, the most bullish perhaps are copper fundamentals?
Absolutely copper fundamental, because the green energy transition is also expected to pick up on the demand. That is one major count for it. And although it is well supplied today, but it's all of lower grades. There is a lot of underinvestment in the projects. So if any new investment in the projects were to come up, that is the reason it's not come up. So then there is a shortage in the, for the short term period, at least there is a shortage. So that could be the major trigger which we feel copper should again rally for the short term. Although US recession fear for 2023 and the global or the ICSG trying to talk of a surplus in copper in the year 2023 would take away the shine of 2022, and 23 could be a lackluster for copper. But yes, now for the short term, copper is still bullish.
Okay. So we're buying gold, we're buying silver, we're buying copper as well. Anuj, what is your sense between precious metals and base metals? Where are you putting your money in? And what are your targets going forward in next 3 to 6 to 12 months now?
Manisha ji, good afternoon. First of all, very warm wishes for the Happy Diwali and New Samvat. And if we check this year from starting to till date, we have saying that this year was very hawkish in terms of federal bank statement. They are continuously increasing interest rate, and all major central banks also looking towards the increased interest rate. And after that, we have seen a correction in gold, silver, and in in the other commodity also, in the base metal also. But right now we have seen that Federal Bank is now going on a lighter mode. They are expecting, and they are saying that they will increase interest rate on a slower mode. So this might be a a U-turn for the commodities. But still, we have seen some disruption in China in terms of COVID issues, and still we have seen a data from the US and even China. There is little bit not as per the remarkable. So I think for a very short-term perspective, market may be on a sideways trend. But yes, definitely, as Federal Bank is going to increase it by slower mode, and other economies also increase the interest rate, so that will be impact on the dollar, and dollar might be go down or maybe consolidated on higher levels. But still, there is a room to increase for the other international currencies like GBP and Euro. So this will impact a positive for the commodity. So my view is, if we talk for the longer term perspective, or let's say for 3 to 6 months, I'm very optimistic for gold, crude, and copper, because these are the commodity which are totally driven by the demand, and I am expecting that demand will increase whenever the economies will come out with from the slowdown, and equity market will increase, and slowly we have seen some industrial progress may be seen in the economy. So this will impact on a industrial metal side. So I'm very optimistic for gold, crude and copper. And we are expecting in next 6 months, gold may test 53,000 to 54,000, let's say in dollar terms at $1,750 per ounce. And crude definitely still there is a momentum between the US and OPEC members. US is saying that they will increase production and they will release more from their reserves. But on another side, OPEC members are saying that they will cut down the production. So that is a doldrum between US and OPEC. So I think market will moving between a range of $80 to $100. But still, the demand concern is that I am very optimistic that crude will increase from here to $100. And yes, copper is an industrial metal, so I think that is also increased. And my target on MCX would be for 6 months is 700. And on if we talk about the LME, definitely I am expecting a positive trend in the LME.
All right, so it's good going in commodities and these are good accumulating levels as well. And we are looking at some positive cues really seeping in case of commodities here. And yes, the China point is well taken because yes, the kind of leadership shuffle that we have seen in China, the zero COVID policy, a very divergent view in sense of monetary policy, all of that seems to be impacting commodities given the sense that China is a powerhouse and nearly 40 to 50% of all commodities are either produced or consumed in China. So that's going to be a wild card looking forward. But with that, we'll go for a short break. When we come back, we'll talk about energy space in detail. We'll also touch base in case of commodity markets in sense of agriculture on what are the top picks here with our experts.